Hey everybody, good morning. It's Pete. Welcome to Stocks for Breakfast today. It is Wednesday morning, FOMC day. Here we go. Buckle up. Got a lot to talk about today. We're going to talk about the FOMC. We're going to talk about stocks trading higher. We're going to talk about Bitcoin. We're going to talk about the futures. We're also going to talk about whether or not the recent price action, all of the selling that we've had over the last week or two, actually probably closer to just over 2 weeks, is the price action that we just saw already baked into stock prices, setting up a rally for the rest of this week? And how does that affect your net profitability over the last 2 weeks and what we can what we can see happen at the end of the month here for September? And we're actually going to do a deep dive. You want to stick around today because we're going to go into questions and comments that we've received. It's something that I really encourage everybody to do. Whether you're buying stocks, looking for opportunities to sell stocks, whether you are looking for profit-taking strategies, new entries, any questions about what we have, I definitely encourage you to click below the video and ask questions. I get back to you as soon as I can, and today we're going to go over a few questions, and they're actually pretty good ones. I don't know if Stacy is on the call with us today, but we're going after you first today, Stacy. So you posted a question that we're going to review, and we're going to cover yours and a few other ones. We're going to get into Finviz, the software. Somebody asked for my template. We'll walk through that today as well. So stick around. We will be back in just 1 second. Okay, if you could just do me a favor, if you find value here on the videos and the live streams, I would really appreciate if you can click down and click subscribe. We had a question from somebody last night that I thought was obvious in that it automatically did it. But if you hit the subscribe button, you have to make sure you hit the alert button too to get notifications when they come in. DL actually asked that question. So what we're going to do today, we're going to go over your questions as well as some of the stuff that we're going to be reviewing for today's trading. I think today's going to be pretty interesting for you because we're actually going to talk about an email that was something I've been talking about for a long time now, which is basically over the last 3 weeks. And it's really the difference between how a professional trader sees price action and what we call reading the tape versus somebody who is very excited to be a trader, but doesn't necessarily have a structure for when is the right time to trade. And I think it's one of the biggest challenges. I think there's two monstrous mistakes that stock traders make when they first start trading. And if you don't have a journal where you're keeping your notes every day, it's very likely that you're not going to realize when you make money versus when you don't make money. So if you want to buy stocks with absolute confidence, or even decide if you should be in stocks, which is going to be the key to what we're about to talk about, you really need to pay attention to when you make money and which kinds of stocks and which kinds of scenarios you make money. Otherwise, you're going to feel like you should be in the market all the time. So the two biggest mistakes by a mile, I mean, not even close, for beginner stock traders especially, are number one, trading too big relative to your experience. You just jump in, you've never managed money before, and that's what you are. You know, write down on a Post-it page, you're a money manager if you're managing your own account. You trade too big relative to your experience, and you take too much risk relative to how much you can earn. So in other words, your trading company hasn't revenues yet, but you're risking far too much compared to what your monthly and quarterly revenue is. Number two is feeling like you need to trade all the time, which is something we're going to talk about now. And again, I don't know if Stacy's on the call right now, but she posted a question the other day. Maybe it was yesterday, actually, and we're going to pull that up. We actually have a couple of questions today. Paul Hayes, I believe, asked a question. So we're going to get into that. There was one question I wanted to answer up here by Richard. Last week's position sizing video. Okay, awesome. Which kind of gets back into what I'm talking about right now. All right. So that's good. Thank you so much. Let's see. Abe, good morning. How are you today? Kenton, good morning. I think I saw somebody was from Switzerland. Wow, that's amazing. Beat Junga, Switzerland. When the market is in correction, you're still screening in the trend direction. That's a very good question as well. We're actually going to talk about when the tape is changing. And, you know, if I could give you a little bit of a sneak peek into what we do in our community, let me actually just bring this in here, and I'm going to pull this up on the screen. This is our Discord channel, and you can see the conversations that actually go on in the community. And I think this is one of the biggest things, and I think it's one of the biggest benefit of being involved in a community is understanding when or if you should actually be aggressive in your trading. And that's a big thing we're going to answer when we answer Stacy's question today. But Delete puts on some really detailed stuff in here. As mentioned in the community, the tape has changed. So we go through all these different things, and a lot of members are adding to the conversation. So what does that mean? So what I'm actually going to do in just 1 second, I'm going to bring up Stacy's question. I really hope Stacy's on the call this morning. Hey, Minvai, how's it going? Because I want her question to be a lesson for everybody, and I want that to be something that we add to what I just showed you of what goes on in the community. Okay. Let's see, Catherine. Yep. That's actually, Catherine, that's another, we're going to kind of touch on that today as well, and whether or not they are the conditions to do that. Ted Santiago in our community the other day asked a good question about that as well. Let's see. Hey, Bob Curtis. Good morning. Good morning. So what I want to do first, I just want to just briefly mention something that we're having today, actually tonight. If you have a chance tonight, Jeff Manson and Caitlin Okram are actually hosting another futures trading event this evening. Obviously, it's free, but the last one we had, the last event we had was actually we had close to 500 people on the last event. It was pretty good. It went about 90 minutes. So if I'm going to tell you who should actually definitely register for tonight's event. If you're trading an account, if you want to day trade and you don't have $25,000 in your account, futures trading is a really good alternative because you're not subject to the pattern day trading rule. And you could trade with as little as a couple of $1,000s in your account and day trade. There's e-minis, there's micro minis, there's a whole different way of trading. And they're also going to spend some time talking about new trading strategy tonight that they call income strategy. Again, this is completely free. I would suggest you at least sign up because then you can even get the replay if you can't attend, but it's 6 o'clock Eastern time tonight. So they have a strategy where they talk about scooping up $50 and $100 bills, where it's kind of a much shorter time frame trade where they have limit orders, and they'll teach you the whole thing tonight. So if you want to attend tonight's webinar at 6 p.m. Eastern time, click the link below in the description and make sure you register for the event. Okay. Number two is obviously the Fed today. Okay. We're going to get into the Fed. We're going to have conversations about what this means, what's going to happen. So I want to bring up what we've been talking about in our community quite a bit. And this is all getting back into Stacy's question. So I really hope Stacy is on the call today. If she's not, I hope she watches the video. So actually I want to put this in there because Catherine, I respect her opinion. I agree. Caitlin and Jeff Manson are really, really good, really good at what they do. So again, make sure you click down and at least put your name on the list. But if you can attend, then you'll be able to ask questions. And I actually think they have a big bonus tonight as well. So here's the thing. We've had a lot of selling going on over the last 3 weeks. We know that the Fed is coming out now. We know all the reasons for what's going on, including this story here, the Evergrande story. They made their bond payment, which is a big deal. This is the reason that everybody gave for the market crashing the other day. Chinese real estate. This was the big thing. So you should, if you don't know about this, I'm actually going to pop this in into the chat, and you should at least click on the link later when you're having coffee and you get in there and you have some time. But what I want to talk about is the Fed today, and this is what separates being a trader who is in control of the outcome versus somebody who's just waiting to see what happens. You have to start forming, if this happens, then I plan to do this. If this happens, that probably means this, right? So we've had a lot of selling over the last couple of weeks. Pretty heavy selling, actually. Now, we all know the Wall Street quote, buy the rumors, sell the news, right? So where are we at this point? At this point, the market has sold off for 2.5 weeks heading into the Fed announcement, okay? So the question on the table right now is, has the bad news already been priced in? And I'm getting a lot of people asking me, should I short sell now after the market has already sold off for 2.5 weeks? The high probability trade right now is not to be a short seller. We're actually looking for opportunities to get long again. We're just kind of tiptoeing our way in, which kind of takes me into Stacy's question. I keep mentioning Stacy because I hope she's on the call. If not, so what does that mean? How does that translate into trading the last 2 weeks? How does that translate into trading last Friday, which was options expiration? How does that translate into trading today? So I'm going to pull up Stacy's question, and I'm going to minimize this here because I want the question to be up on the screen. And here it is. And I'm going to make it a little bit bigger so everybody can see it. And this really, I hope this emphasizes for you how much I really want you to ask questions because I want to help. I just need to know what you need help with, right? So Stacy's question, and she posted it on yesterday's video. Why do you not give a few stock picks anymore? And the anymore part there is the important part, all right? It helps when trying to get your feet under you, especially in present circumstances, okay? So I'm going to leave that up there, but I'm going to kind of squeeze in here just so that we can, let me see if I can make that a little bit bigger, okay? So here's the thing, all right? And I know that Stacy's been trading for 2 years because in a previous video, she posted in, we asked questions, how long everybody's been trading. So actually, just out of curiosity, if you could type into the chat, how long have you been trading? And quite honest, how long have you been trading, and do you feel like you have enough experience? Like, what do you think you're missing? So anyway, this is the point that I want to get across, okay? Number one, we've been talking quite a bit lately about, again, we just showed you inside of our Discord community talking about how the tape has changed, how the market has rolled over the last couple of weeks. I have purposely stayed away from making a lot of stock picks on social media right now because the market's been hard. It's been really hard to find great ideas, which kind of takes me into what I want to show you about this morning's email. Okay, so I'm going to walk you through what we put in this morning's email, and I'm going to make this a little bit bigger so you can see it. So this is obviously this morning's email. This is the email that goes out to our community. So last night we discussed what I just mentioned, the 2 weeks of selling, the futures are trading up early. So here's the big part, okay? Here's the part that I want to make sure is really emphasized here. If you've been patient and managed risk properly, you're in good position. A couple of days of trading can make your month. I can't express that strongly enough, okay? When the tape changes, you can reduce losses so you don't dig out of a hole when the market becomes easy. So here's the point that I want to get across, and this is to Stacy. I'm going to bring Stacy's question back up here, and I want to just be straight up with everybody, okay? When the market becomes tougher, when the follow-through starts to be tougher, when it's very hard to find a large group of stocks or even any pocket of opportunity where we're getting consistent follow-through, you have to learn sometimes being in cash is the right trade. A lot of times reducing position sizing is the right trade. So Stacy noticed that I've been doing a lot less stock picking on social media because, quite frankly, in the tougher conditions that we're in right now, you need more conversations about how to manage the trades as opposed to just saying we're going to be looking to buy X, Y, and Z stocks today because it's a tougher condition. So to Stacy and everybody else who maybe overtraded a little bit over the last couple of weeks while stocks were going down, maybe you blew your stop loss, maybe you averaged in, which shame on you. That's not something to do. And I'm going to pull up Richard Gresham here, 15 years as a chart trader, okay? John Pena, who's been a part of our community. I know you have a lot of experience, right? Susan, 2 years. Okay, let's see. John Lash, 25 years. Okay, not being consistent. So John, 25 years of not being consistent is kind of tying into what we're talking about right now, which is it's imperative that you learn when you should be trading. It's imperative that you learn when you should be going in with smaller initial share size, looking to build a position. And if you don't learn that, that means that you don't have an edge because that means that every situation that you have looks the same. So you absolutely need to be able to understand these conditions are awesome versus I have a trading account and I need to find something to do. That is the worst situation to be looking for something to do regardless of the market conditions. Again, Catherine commented last week that I personally like to use driving as an analogy for trading because you have to learn different conditions before you do it well. Having a trading account and just wanting to trade or looking for stock picks without regard to the market conditions means you need to work harder on developing what great ideas look like. Okay, so just want to wow, we got Romania. Hi, Andre. How are you today? Wow, a year from Romania. That's amazing. That's absolutely amazing. All right, Guy, profit maximizer. That's another big thing, is understanding how to learn to hold your winners, which is a really big part of it. Let's see. Bob Curtis has been in cash for a month. Honestly, exactly. Bob Curtis, I couldn't have worded it any better. That's exactly the point. So when we go back into what is the secret to trading, and again, I don't use that term lightly, this is something that most traders never learn if you don't have the context of being around other traders, understanding when to trade bigger, when to scale back, when to be in cash, when to go get coffee. This is, take a snapshot of this, please. This is something that you never learn unless you're around traders who have experience and have been around for a while, because you have the mistaken thought process. And again, I'm going to bring Stacy up here because I want everybody to see the context of the question. It's not, the market is not the opportunity to be involved all the time, and you need to recognize that. But even more importantly, let's say that you recognize that, you still need to take action that allows you to be net profitable at the end of the month. And this last part here is what's super important. Number one is not digging yourself a hole, because let's just face it, when it's obvious, which we had for about 18 months, it's not hard to make money when it's obvious and everything's going up and you really can't make a mistake. But that just means if you believe that's the reality of the market, you haven't been around long enough. You haven't been around long enough to experience what we've been seeing the last 2 weeks. So let's say now how that ties into with the Fed now and the announcement that we have coming out today. We have the market has been going down for 2 weeks heading into the announcement. Futures are up this morning. So what are we thinking about today? There's a very good chance, again, probability, we need to see it unfold in price action like we talked about yesterday, that is already priced in the short term, and we could see a move over the rest of the week. So if the bottom was in yesterday, we're seeing more buying today, and we hold the bid today over the next 3 days. The next 3 days of trading could make your entire month of September, as long as you recognize that it was a tougher couple of weeks of trading. So Susan really inspired, Stacy really inspired a question that I wanted to focus on today, because I just really think that her question was a really good one. It was a really good question, and I think a lot of people really need to understand that you need to say, when should I be involved? Which kind of takes me into what I want to share next, which is we got a question about, where the heck is it? Here. Paul Hayes asked a question about, can you share your Finviz template or the settings you recommend? So we're actually we're gonna tie in Stacy's question. Again, I'll just put that up here with actually looking at Finviz. So I'm going to first talk about Finviz, and from the question of how do you understand when we should be trading bigger, understanding when you should be buying stocks, understanding when you should be scaling up, understanding when you should be pulling back, which, by the way, this all should be a part of your trading plan. Look at the major sector ETFs over the last couple of weeks, and specifically over the last couple of months. Now, the major indices broke out a little bit, right? Maybe pulling back a little bit now, but especially over the last 2 weeks, it's pretty darn hard in that window to say, you know what? I have a lot of conviction. I really can't wait to be in trades. Let me find some ideas. And this is actually where order flow now comes into the equation. This is really where you need to learn how to set up your ideas and find stocks that have order flow. So we actually got a question also in reference to setting up our order flow. So we got this question here from Robert Ryan. Still curious about how you construct your order flow spreadsheet. Use it every day, but it's something that you construct. And you can see my answer here down here. It's part of my nightly game plan process. So what we're talking about is this. First, we talk about the sector rotation. And essentially what we're looking for, again, going back to the other questions, is all about how do we find opportunities that are obvious where we need to then go in and look at those stocks. So if you remember what we talk about all the time, we have the stock market power pyramid, which if you want to learn more about the stock market power pyramid, that's a lot to say at 7:30 in the morning. We have a video in the description. It's another YouTube video. You can click on and watch that. And essentially it works where you're building an argument, which is how we read the tape. You're building an argument for accepting risk. Starts out with the big picture of the market. Then you add another layer of the pyramid above that, which is the sectors, which you see on the screen here. Then you have the next layer, which are the industry groups within the sectors. And then you have the individual stocks. So the market conditions right now in building this out, you need to understand, should I size up? Should I be in cash? Are there pockets of opportunity? Which kind of takes us into the next thing. And I'm going to actually give you a screenshot of the stocks that met the scanning criteria today for order flow. And that was this list. Okay, I'm actually going to minimize myself here so you can take a look at the list. And this is the list of stocks that meet the criteria. Now, this is just stocks that meet the criteria. If you want, you could snapshot it. But then you have to go into the second part of that, is which stocks actually are trading opportunities. So this is really, I think, an area where newer traders, especially, we just saw a lot of traders that have less than a couple of years experience, some people trading 6 months at a time. After you run the scans for order flow, you start out with the sector rotation and you run across the board. So I just showed you how we do that. First, we start out with the big picture, and then we dive into the holdings within those sectors. And I'll show you that in 1 second. Then you need to go in and you create a list of stocks that match order flow over the last quarter, over the last month, over the last 5 days, and how they closed yesterday and how they closed yesterday relative to the open. So you can see we start to build out these sheets, both from a stock perspective and from a sector rotation perspective. Now you can see over the last week, there really hasn't been that many pockets of opportunity, but energy is kind of holding up a little bit. But then we dive into the individual stocks after that. So I want to make this clear. All of this is a part of the game planning process to put together ideas where you have absolute conviction that if something in your game plan moves in the direction that you script, and remember, we talk a lot about scripting out your success, especially for the first 90 minutes of the day. If one stock does exactly what you expected it to, that's when you start to look at ideas and you trade that with absolute confidence. So you can see on the top of the list here, UPST was also in our watch list yesterday. And remember what I said, and this is important. I want to really bring this point home, because we just mentioned here about a couple of trading days can make your month. If you don't dig yourself a hole, when the market becomes easy, it's easier to be net profitable. So again, getting into the list of top stocks, and we're going to walk through something I want to share with you, because it was in our list. It was a trade from yesterday, and this is a peek inside of our community. And we get a lot of questions about how do we manage what we do intraday? Do you get my alerts and all that kind of stuff? So this is the trade that we watched yesterday, and really bringing the trade home to understand trade management, trade entries, stop losses, profit-taking strategies. So that stock that we were watching yesterday, again, the whole point is I want to bring this home about this, which is if you manage the downside when it's tough and you're in position to have stocks in your game plan follow through, you end up getting some opportunities like we got yesterday in one trade that made the month. And especially on the day trading side, you have opportunities like this unfold and you become net profitable for the week, the day, and the month on one trade, just one trade. So what I want to get across to you right now, and I'm going to leave this on the screen because it's I think it's that important, is that a part of learning how to be a profitable stock trader is it's critical, absolutely critical. And I'm going to keep going back to Stacy's question about calling out more ideas. It's absolutely critical that you start to pay attention to when you're making money, what are the conditions, what type of stocks, all of that kind of stuff. So I'm going to even take that a step further because we have the Fed today, okay? In my personal trading plan after the last 21 years, and again, if you don't know my background, just super quick, I had a trading firm in New York City. We had 300 traders. We had offices around the world. In my 21 years experience, I find personally options expiration day and FOMC days to be challenging to trade. I went back in my P&L and I saw that they were just not worth the mental energy that I put into it or the strain on my trading account because I didn't feel like the probabilities were awesome. So you should start thinking about what types of stocks kick your butt, what sectors kick your butt. Should you be a day trader or a swing trader? Which one of those two are you actually making money in? Are there individual stocks that you can't make money in? Should you be long only, or should you be long only and short only? Should you be trading stocks, options, futures, Forex, crypto, or just one of those things? It's absolutely critical for you to understand the conditions and the types of ideas that are perfect for you, perfect from your risk tolerance, perfect from the amount of money you have in your account. So again, if you have a smaller account, click down and subscribe to that webinar we have tonight on futures trading. So this is a really big deal, because I'm going to tell you this straight up, and we only have like 5 minutes. So I want to make sure that I get this point across. You're watching this with me right now. It's 7:30, 7:45. You know, we get to 8 o'clock in the morning, and you spend the time to be here. If you're like me and a lot of people that we work with in our community, you probably have gone through this period where you feel like you know everything about trading and you can't make a dime. You lose a lot of money. You start to lose less money. You kind of break even. And now you learned everything you could possibly learn about reading charts and technical analysis. And I am super disciplined, but I can't get paid. That last step that you need to do is really start to refine what works for you and make a big list of what absolutely positively doesn't work. And when you start to do that and you avoid those situations that don't work, like again, for me, FOMC days, I find challenging. So I'm okay with not taking too much risk, especially in the afternoons. Once you start to do that, you will start to see that you're not going down and coming back, going down and coming back. You go down less because you're avoiding situations that you don't make money. And then the other side of that is you have a lot more conviction in the times when you do make money. You no longer hesitate. And then the next thing, which somebody just typed in before about understanding how to make more money. I think it was actually Guy Sorrento. So that's the path. That's the process for every trader. But if you're stuck, and again, type in "that's me" if this is you, where you feel like you know everything, but you're not making money. If you feel like you know everything and you're not making money, that means you need to learn something. That means there's still a conflict of what you don't know. That makes sense, doesn't it? I mean, it just makes sense that you need to learn something different from what you're doing right now. So the question is, where are you going to get it? The quickest place is inside of your own trading journal. But, and this is a really important thing, I've actually had a lot of traders tell me that they don't have time to keep a journal. That is the biggest crock of BS I've ever heard in my life, because you're essentially saying you don't have time to learn how to be successful based on the results of what you're doing. That's like eating pizza every day, not paying attention to it, and not understanding why you're not losing weight. You need to write a journal. You need to write pre-market. And we talk about this all the time. Have the guts to script out what you think is going to happen this week if you're a swing trader. Have the guts if you're a day trader to say, this is what I think is going to happen today. And because of X, Y, and Z, that's how I'm going to trade. When you start to do that, you'll be amazed how much pre-market you are correct. Because if you know technical analysis, the next step is actually learning how to be a trader, but you have to take these steps. So again, I'm focusing on you. I'm pointing to you right now that if you're stuck but know everything, these are the steps that will make the difference. So you could do trial and error, learn it on your own, and continue to journal. You could watch these videos. You could be part of our community here on social media. Or if you want, again, John Pena is a part of our community, a bunch of people on this call right now. You could learn about our private community if you want. But the bottom line is this. If you're here right now, you have the desire to be successful, but you have to admit something's missing. And you have to take a legal pad out and you have to say, what am I not understanding? What part of trading is missing for me? And then I'm going to challenge you to ask questions in the comments. When you figure out, or when you start asking better questions, I guarantee you the answers will start to pop up. So we're going to go all the way back down into Susan's question where we started out today, Stacy's question, which was understanding when to have more stock picks, when to not have more stock picks. And for a lot of people, those are the keys to really understanding how to get to the next stage of trading. What I want to do, though, is somebody had asked for my basic template of my scan. So what I'm actually going to do is I'm going to pull this up on the screen, and I want to just show you what it is, and I'll put the link in here. So everybody knows I use Finviz for a decent part of my scanning. So I'm going to pop this link, and you can see it's my template for this year. I start out with stocks that are over $15. I don't trade penny stocks. I work my way into average true range of at least $1.50. So that means that there's opportunity on a regular basis. And you can see what average true range is there. It's the high to low average over 14 days. And then average 2 million. Now, some people drop this down to 1 million, and that's actually fine. If you want to do that, that expands the list dramatically. But because I tend to actively trade, I'm looking for stuff that has institutional attention on a daily basis. Okay. And then I'm going to pop this in here. So you should be able to put this into Finviz, even if you don't have a subscription to Finviz. So there's the template. Okay. If you want, that's a place to start. But what do we do from there? That's the big question, right? So how do we identify stocks that might have order flow now, which kind of gets back to the question that we had before about the order flow spreadsheet and how do you start to come up with all of that? Well, this is where you start to work your game plan. So let's just tackle it just on a surface level here. Performance, okay? I want to take a look at stocks that have been strong over the last month. So that whittled down 200 stocks down to 100. Now I want to say what stocks have been positive for the last week, which is the last 5 days. That brings it down to 45. Which stocks closed strong yesterday? That brings it down. And actually, let's do two different ones. Up yesterday versus up yesterday by 1%. Dramatic difference. Let's start working it even further. So we go up yesterday and up from the open, which means that it was a green candlestick. That brings it down to 18. Which of those stocks are above the 50-period moving average? Okay, so we bring that into the equation because that's the minimum criteria. And that brings it down to 16. Okay. Mine never says pre-market. It says I'm not subscribed. Okay, so you should be able to pull that up either way. I believe that, matter of fact, I know for a fact you can go in and do all of this. So you might want to watch the video again. If you sign up for, and again, I'm not getting paid for Finviz. This is just me giving ideas. If you go into Finviz and sign up for, I believe, the free account, then you can save these kind of scans. I think the only difference is you don't have real-time quotes and you'll have ads popping up. But click that link. Even if you don't have the, let me actually put that in there for you again. Let me actually do it in a, I think you type it in there. If not, screenshot it. And when you watch the replay of the video, you can go in there and see all the scans. But do you see what we just did? We actually took 220 stocks and brought it all the way down to 16. That's a part of the homework. But then the next step after that is after stocks fit that criteria, then you actually have to go into the charts and see if there's actually trading opportunities. Which of those stocks are the best of the best that have opportunities to be involved with right now? And again, Uber is probably a really good one to use as an example because Uber actually had news yesterday. So Uber and Lyft are up today and they're getting a little bit of industry group boost yesterday. So it's going to be curious to see if one day of a catalyst will carry those over the next couple of days. So we talked about a bunch of stuff today. And actually, Joseph has a good comment here about journals. Yeah, everybody hates to write in the journal, but you know what? Nobody likes broccoli either, and it works. Catherine, let's see. Learned so much about my trading style for my journal. Yeah, and you know what? I think we're going to actually finish it up here on Catherine's quote here because I think it's that important. I have to head into my other game plan meeting with our private community, but I just want to leave on this. The important part about what Catherine wrote here is about her personal trading style. Now, there's a way of looking at everything to find order flow. Obviously, we talk about how I look at order flow and how I read the tape. And what we just talked about there is just like a tiny, tiny piece of what we do. My game planning is usually at least 90 minutes, and we just went through it in about 30 seconds. So you can imagine how much more is behind that. But you need to understand what works for you. You need to understand what types of stocks. You need to understand what dollar amount of stocks. You need to understand what kind of volatility is right for you when you buy stocks based on your experience, your skill level, your risk tolerance, all of that kind of thing. And then when you take trades, you get feedback. You take trades, you get feedback. That's how I became a professional trader. I stopped having an opinion and I put my best trade out there and got feedback and got feedback and got feedback. And only when I started to be consistently profitable, only then did I start to trade bigger. So we covered a lot of stuff today, but I think the number one thing is understanding when and if you should be trading, which means you need to first have an edge. And if you think you should be trading all the time, that really means that you need to define your edge in a much deeper way. Okay. Everybody, thank you so much for joining me. I have to slide over into our game plan meeting with the private community. Thank you so much. I really appreciate it. Hit that subscribe button, hit the alert. If you have follow-up comments, I'm going to challenge you now. Put your comments below if you have questions about all the stuff that we talked about today. I want you to know how much I appreciate you being here with me. Go out there, buy stocks with confidence as long as you have your edge in the market. All right? Have an awesome day, everybody. I'll speak to you soon.